Hey guys, we're here again, back at it. American Coin and Currency, tokenized economy, and how RWAs will reshape real estate, finance, and hard assets. We're here with 𝘄𝗲𝗵𝗶𝘀, CEO, founder of American Coin and Currency. We got Matthew Schneider here this week with us from Building Inc. How's it going, guys?
Going great.
Afternoon. Doing well.
It's fantastic. Give a little intro about me. I've been in the RWA space since 2020. I actually bought the first 𝘁𝗶𝗁 that was digitized on television on Discovery Channel. That was really cool. Yeah, since then I've been in the RWA space, focusing on physical assets, clothing, apparel, and tokenizing with Sony. We did a demo with them, as well as tokenizing a speaker. And then worked with John as well with ACDC, working on coins, currency as well. And intro of Matthew. Matthew leads Building Inc., technology firm pioneering data standardization, blockchain tokenization, AI-driven valuation across the built environment. His work focuses on transforming fragmented real estate data into reliable, verifiable, finance-ready digital systems, enabling the next generation of real-world asset RWA tokenization. Fantastic. So glad to have you too. And yeah, how's the Building Inc. going for you? Maybe a little intro about how you got started and where you're at now.
Well, thank you, Dustin and John, for having me on the show. Very exciting to be here and at such a critical time. I really feel like we're at the inflection point of a shifting monetary policy. We recently had some highs on gold, silver as well. And then you have the conversation really shifting to tokenization. There's so much happening here between the asset managers and the banks, the regulators. So it's a very active discussion. It's really cool to be part of it. I think of us as the Rockefellers of the digital era of finance. We're trailblazing in the space, certainly. I was exposed to tokenization 5 years ago. 5 to 6 years ago. And I started looking into what the technology could do because I was a little perplexed at first. I had been in capital markets. I was a day trader, an entrepreneur at heart. And then I started learning about real estate. And at that same time, I came across a case study, I think it was out of Singapore, that was talking about blockchain technology and how people were trying to represent the old paper certificates for securities and financial instruments in this new digital format. And I thought, that's really interesting. What else is going on with blockchain? I saw the cryptocurrencies. I saw people talking about tokenizing other asset classes, art or commodities. And I thought, this is really cool. And I think it's going to be really big. I think that this is going to take off. I'm not sure what it was, maybe a gut instinct. I definitely saw the price of Bitcoin going up, and maybe that was this driver, this catalyst for my interest in all of it. And so I set out. I had a co-founder. The first venture that we had in the space was a marketplace for tokenized real estate. So we were syndicating real estate projects, real estate investments, and bringing in new investors to fund these. It was quite a difficult venture. It's very challenging choosing a marketplace as your first company. It's hard enough building a startup, but then it's very difficult to build a marketplace where you have buyers and sellers and they're trying to meet in the middle and facilitate a deal. So inevitably what I ran into is that we have to pivot. We have to take a different approach to what we're trying to accomplish with tokenization or real estate, because just applying technology to the markets doesn't necessarily make the markets better. That was the big learning, the big takeaway, the lesson, the teachable moments that I had is that you can't use blockchain as a silver bullet. You can't just apply technology as a layer on top of capital markets and hope that things work better. So we sunsetted that company. I stepped away and I started thinking, what does real estate as an asset class, as a market, as an industry need to function better? I like real estate. That's just where my interest gravitated towards. And then what is blockchain really trying to accomplish when using this technology on top of that asset class? What's going wrong in tokenization? We're starting to get some projections at that point. People are saying it's going to be worth trillions. It wasn't, and it's still not. What is that gap? How do we close that gap? And then how do I turn a business out of closing that gap? Because if people have a desire to tokenize stuff and we're not there yet, maybe there's something I can do to help out and monetize that. And all of this came together. It definitely led me down the road towards data. I felt data is certainly the new oil, but it's also the bridge. It helps close the gap between what's going on in the real world, all the stuff that we can see and touch already, and then these virtual markets, these digital markets, digital finance that doesn't necessarily know what's going on in the real world. So how can we start to inform digital markets and digital finance? How can we collect that data? How can we make sense of it? What is being collected? What's verified? What are the problems? And all of this, long story short, became the culmination that is building Inc. today.
Wow, that's great. That's a fantastic story. I love which way you're going, which is the right way. You're going the right way with this. Thank you for that.
We like to think so.
What's your before we get into the segment, John, if you want to add, like, what's your take on the RWA space? Where's it heading, and how is ACC involved?
Sure. The RWA space, I agree with what Matthew was saying, that the projections were that it's going to be just a massive market, which I believe it's going to be in the trillions. I think the time frame will get pushed back. When I initially found out about RWAs, probably 4 years ago, and it was an article that I read, which I believe it was Larry Fink in that article, stating that by 2030s he predicted the RWA marketplace to be 16.9 trillion. And that caught my attention because just to get a tiny sliver of that would be absolutely incredible. And I found it fascinating in that you could take items that are traditionally illiquid, static, and then convert them into something that can potentially bring in additional revenue stream for you. So that that in and of itself I found compelling, and just being a part in some way of something new. Real quick, I'm a little older than you guys. I was a stockbroker and money manager back in the 90s. And so I saw the internet come out, and then, you had Lycos and AOL and all these other portals popping up, Yahoo, and the .com bubble. And even though that was fantastic to be a part of that, and I learned a tremendous amount and did very well, I saw that technology, in this case being the internet, and what was potentially going to happen with that. And I was mad at myself that I missed out, because even in the 90s, I mean, you had serious people saying that it was a fad. Paul Kruger, from an economist and contributor to the New York Times, he is famously quoted as saying, "The internet is a fad. It's not going to stay around." Well, he was obviously very wrong. So when I started learning about the RWA space, in my mind, it was, for me at least, a second opportunity to get involved early in something that's going to change the world in many ways. And I find that very, very compelling, not even from a monetary standpoint, sincerely, just from a standpoint of being involved in something that's changing the way that we transact with each other and how we invest. Is, again, it's just something I always want to be a part of. And now that we're getting deeper into this build out of tokenization, it's really exciting. And I love having someone like Matthew on who shares the same sentiment, in that the opportunities here are great, but the opportunities also to build something, right? A lot of us, we just want to build something. Like, I built that. There's something, as it's for me as a man, I just love building things. I get a lot of satisfaction out of that. So yeah, I know I'm all over the place here, but there's a great use case for tokenization in the industry that I've been a part of for many years, which is rare coins, precious metals, other rarities, collectibles of high value. And so it's exciting just to see where it's going. And things are constantly changing too. It's a very fluid environment, right? So from what I had initially read, yeah, real estate was and treasuries were kind of like the first cases of let's try this out, tokenize, and now there's billions and billions of dollars in treasuries already tokenized, and some real estate already tokenized. And I think once people really get and understand this flip that's going to happen, these changes, even though it's not going to be overnight, they'll see, wow, this is really earth shattering what's going to take place over the course of the next few years. And the people that had the foresight or luck, right, to get involved in an early capacity, well, I think we'll look back and be very, very happy that they did so.
Agreed. And this leads into our segment here about tokenization. And Matthew mentioned about kind of that gap in like capital markets and real estate. So how does blockchain solve these issues and some of those like historical like transparency gaps? Like what was it previously, and what does tokenization offer for blockchain?
Well, I would start by saying that blockchain solves some of the issues, but certainly not all. And that's why I think of us as a data company as much as we are blockchain and tokenization. Blockchain needs something to actually attest and verify. If we're using it as a distributed immutable ledger, that means it's verifying something that is occurring. It has to draw from parties being involved, transaction, and then that transaction data. So before we can even talk about the use of blockchains, we have to talk about what's being recorded, who's involved, what is their responsibility or duty to make that transaction visible to the tools that be and eventually blockchain. And this is where a lot of legacy industries currently struggle, because there is a lot of offline activity, and you cannot tokenize that offline activity. You cannot start to price or understand risk and performance, and you definitely cannot create financial instruments or have any sort of DeFi activity based on offline activity. And when I say offline activity, this could be everything from contracts that have not been digitized, documents that are sitting in an actual physical filing cabinet at some point, a subscription agreement that has fresh ink pen on it and was not uploaded to some sort of Google Drive or held in a virtual repository. We're talking about transactions and currencies that are still being done using tangible dollars instead of anything that's digitized, or certainly or a stable coin. And so this is the big struggle of blockchain or tokenization as it stands today, is that first we have to talk about digitization. And I know that this is a big pivot from the actual question, but this is the way I like to answer the question, because we have seen over the past 6 or 7 years that tokenization has not reached terminal velocity. It has not become hyperbolic. It's not scaling at the rate. If you look at what's actually been tokenized and what sits on chain today, it is 1/1000th of the projections by 2030. So from the end of 2025, beginning of 2026 to 2030, that gives us 4 years to grow the industry or the markets by 1,000 times. What are we going to do to grow this 1,000 times? Well, really, the answer is we have to start digitizing things. If you want access to asset classes that are going to move billions or trillions on chain, you have to recognize that those sit offline. So you're almost waiting on these legacy industries to digitize and modernize so that you can start to tokenize them. And that was one of the major responsibilities that we took on. We said, we recognize that there is some effort in real estate to modernize, to increase productivity or increase transparency, but it's really not meeting the needs of capital markets and certainly not tokenized capital markets. So we had set out to try to digitize information, have digital workflows, automated workflows, so that information can at least be online, it can be accessible, and it can be usable. And this is the first point where we introduce blockchain into the equation by saying, okay, now that we have started to digitize information that is being held with all these different stakeholders and all of these different formats, now that we have gone through the trouble of digitizing it, how do we trust the digital format that we are working with? And that is the beauty of a blockchain, where first and foremost, if we recognize that it's immutable, then it's trustless. So if we were to digitize and attest something and then give it this stamp of approval, a digital fingerprint, that verification, that hash, that SHA-256 hash, and say this document is now in its current state verified, and we can trust that, and everyone can trust that, and everyone across all jurisdictions and different responsibilities can look at the same digital information and trust that inherently, because that's how anything verified at the blockchain should operate. That you don't have to wonder, has this been manipulated? What's the versioning of this? So it's very lightweight, but blockchain sits on top of the digital infrastructure that's being developed for each of these industries. And John, you had mentioned that you were a stockbroker in the 90s. You saw the dematerialization of paper certificates and you started to see capital markets come online. But we still deal with so many different stakeholders, and you have questions around settlement and reconciliation. You do have to cross-check books, and you have all these different stakeholders, your actual exchanges and the custodians and the brokers, and then the individuals trading capital. And so even though that has been digitized, it's still an imperfect system. And people are trying to layer blockchain on top again and say, well, if we can at least verify some of that information, structure the data, and then get it verified about what trade is occurring and when, and then pull that deeper. Do we have access to all of the financial information for these institutions or these exchanges or these individuals that we're working with? Has it been digitized? Is it accessible? And then if it is, can we start to trust it? Because if you look at when the banks went digital, of course we can wire and it happens all very quickly. Internationally using SWIFT, it's still quick, but it's not perfect, because even though they've gone digital, they still don't trust one another. So it's like layers of a cake that we're building here. First, we have to say, let's digitize things, and then let's tokenize it so that we can trust what's digital. So it's this incredible compounding effect that has been happening in the past couple of years, but it all starts, there's still a common denominator, which is that have we started to digitize things in the first place? And I'm sure at some point in the conversation, we'll talk about commodities and how there's pros and cons of tokenizing something like gold, where of course you no longer have to worry about the physical asset that you are handling and transporting, right? So the functionality of that asset dramatically increases. But at the same time, how do you digitize gold? You can't really. So it's this conundrum where you have a physical asset that needs to be frequently audited, and you have to have a really strong treasury, and maybe there's still intermediaries there, and then you tokenize it. I'm probably beating a dead horse here, and I know that the question was much simpler than the answer that I gave. So I will take a step back.
We appreciate your answer. Yes. To go back to the 90s, I actually remember some customers back then requesting their stock certificates be sent to them instead of just having it at a brokerage house. So yeah, things have changed dramatically. With the nice thing, Matthew, with collectibles, at least graded collectibles, is that let me pull it out. They all have unique numerical identifiers. So as you can see now, is that upside down? Yeah, that's upside down.
Yeah,
They
no,
all
you're
have
good.
numerical identifiers here, and that really helps with the digitization and tokenization of these types of items. But with just bulk gold and silver and other things of that nature, that's a different story completely. I did have a quick question though, Matthew. I'm really fascinated with how. So I understand the use cases and the utilities of tokenization of real estate. Let's say for you in particular, if you're looking for to tokenize something, let's say we're hypothetically at that point where there's mass adoption right around the corner, and now many deeds and properties are being tokenized. So what would be better to have? Would it just be tokenization of let's say my house, right? Or would it be income properties like an apartment building that has 8 units in it, or a rental, right? That's going to constantly have more income coming through. I'm just trying to get an idea of when you're looking to digitize and tokenize a piece of real estate, does that part of your calculus?
So there's a few things that go into consideration. My run-on answer previously was just covering enterprise use case of blockchain. Can we use this so that different parties can trust the same information? Then you can start to tokenize ownership. And this is very, very interesting because it's no longer just the transmission of information, but also the transfer of value. And this is what's incredible about tokens, is it's not just a ledger, but it is the execution of a transfer. So whether that's ownership of a property outright, and maybe it's a deed, or the capital stack associated with that property, when we hit send, that's realizable value that is transferring, and still in this data-rich, trustless environment. And that's what's so incredible about tokenization, is that you are taking items from the real world, contracts or securities that have maybe one function, and you are blending them all together so that you have this higher functioning financial instrument, this higher functioning digital asset that accomplishes multiple goals with one strike. And that's what's super fascinating about it. Now, how you want to tokenize and create that digital asset is up to the discretion of the issuer in many cases. So if someone is looking to move deeds in bulk on chain, and this happened recently, there was $300 billion worth of real estate deeds that went on chain. Their purpose for moving things on chain for transparency and auditability is a bit different than if I were to tokenize the capital stack, so equity or debt of a commercial property. Fundamentally, it's the same process where you have first a physical asset with a contractual obligation that's being digitized, and then beyond digitization, it has some sort of a blockchain representation. And in some cases, in other parts of the world, they removed the digital representation and said, just put it on a blockchain in the first place. Make it blockchain native so that we don't have all these copies of things. So that is still happening in practice, regardless of what the contract is. But then it's, how do people plan to continue to transfer that? People are not going to day trade deeds. That doesn't make sense. But you would day trade a derivative financial instrument created off of the capital stack of maybe an index or an index of lots of different commercial property equities. So they have different functionalities, and what you're seeing is the emergence of different contract standards and different instruments and different regulatory frameworks and how that fits in, whether it's SEC or CFTC or property law, and adjusting the blockchain use case accordingly. But up until this point, that conversation was not appropriately being held, where we just said, okay, it's blockchain, and then we put all of these blockchain digital assets into one basket, and it really confused people. They said, well, are we tokenizing the capital stack? Are we tokenizing the deed? Or if it's a utility token, or if it's a stable coin? And it's taken so long to actually say there are many different use cases of blockchain technology, and we're going to apply it to this specific desirable outcome. Maybe it's auditability only, or maybe it's transactability only, or higher socialization of a financial instruments, like raising capital from global investors. That's what we've seen. So this is one of my answers. I tend to give answers that maybe indirectly or don't actually answer the question that you asked, but I think it comes down to there is no right answer, because it's going to depend on you as a property owner. What are you even trying to accomplish? And that's the conversation that we have. And it's the same thing with data. A really good example, if you have data, are you trying to run your properties better, develop better, fix communication errors? What are you trying to do? I can give you a hammer. Let's simplify this down to the most fundamental basics. If I give you a hammer, what are you trying to accomplish with it? Is it hitting a nail? Is it pulling out a nail? Is it hitting someone on the head? It's the same thing. I can't answer that one for you.
Good point. So you said there was $300 billion. Was that the number?
Yes. That had moved on chain in a quasi-government initiative.
Okay. Yeah, I never thought about. I have thought about how these instruments would be traded at some point in the future, and synthetics never popped in my mind. So I'm really glad you brought that up. Mm-hmm. That makes total sense. And now you have a tradable asset there. In your opinion, Matthew, once this ball really gets rolling and the train leaves the station and all that good stuff, where do you see these types of instruments trading? What like traditional exchanges, online?
It's going to be a combination of these new age exchanges, which are already emerging. So think about Binance as a phenomenal example, and they're going to be sticking around, especially because CZ and World Liberty Financial and the Trump admin seem to be working more closely together. I suppose that's a bit conspiracy to say that there's any correlation between his pardon and the deal that they struck up with MGX. But you have these new age exchanges that are emerging. But at the same time, you have legacy exchanges for, say, equities or other indices that are out there. They're not going to disappear. They shouldn't, and they couldn't, because that's where the trillions of dollars of liquidity already sits. So you want some sort of blend between the new age exchanges that are digital first and the legacy exchanges, which are capital first, institutional first, or just are already predominant players and could maybe shut down the whole thing if they wanted to. And you're seeing instances of, I think NASDAQ is talking like, what if we did allow some tokenized securities trading on here? What's the infrastructure required for that? You have, and this would be a broker, not a brokerage, not an exchange, but Robinhood is definitely trying to start tokenizing equities, and where is that going to trade? Who's going to custody that? Now, historically, there have actually been instances where this was tried and failed abysmally. There was an Australian exchange, and the actual name slips my memory, but a few years ago, they had dumped tons of money into saying, well, what if we took our exchange and had more robust blockchain-based infrastructure for trading? What would happen next? And it failed. It failed for a myriad of reasons, but it almost made the other exchanges shy away from the concept. Now, with all of the maturation that has occurred in tokenization and blockchain, and all of the institutions that want to potentially tokenize their financial instruments for a wide breadth of asset classes, the conversation is picking up again. I still think it's going to take many years for multiple things to happen. Number one, who are the friends and who are the enemies? Because everyone wants the transactions occurring on their exchange or on their allied blockchain. So there's going to be these constant disputes, and then maybe there will be lobbying against one form of transaction, and right, all the politics that goes into it already. And then just the fact that you can't really patch your way into blockchain or tokenization. It's a completely different system. Like, you can't just slip in blockchain in one place and say it's tokenized now. It requires all of the financial infrastructure to be elevated. Otherwise, you're introducing all sorts of friction. Here's a really good example. You want to trade something that's tokenized. That means it's on a blockchain, which means you have to get the capital on a blockchain. Your money has to be on a blockchain. So what's the on-ramp there? And if it is on-ramp, where are the wallets? Whose wallets are they? How is that being converted? And where's everything being settled? So there's all of these new friction points when you have this sort of fragmented blockchain, like Frankenstein monster that we have created with all these different things coming together. So it's going to be years, but the conversations are at least starting.
Very true. Yeah.
Yeah, I mean, I'm excited to see, you know, a bit more on ramps when it comes to RWAs, especially a lot of the funding, you know, put on chain, so that way we can, you know, kind of pave the way for, you know, the next generation for real world assets. I know we didn't really touch on digital twins per se. I was in that kind of space for a while. Let's touch a little bit about, like, what are some of the plays digital twins offer when it comes to physical buildings, when it comes to, you know, on-chain assets, and how are they investable?
Yeah. So I take it back to, we wanted to make good real estate. It's the same reason that we pursued a data platform first, and making that the focus as opposed to just tokens. If you make good real estate, you're giving yourself a better starting line for when you go to tokenize the real estate. And digital twins are a really cool property technology that's coming out, where you can create first a 3D model of the property. So instead of looking at lines of text for something that has 3 dimensions, right? It's geospatial. Instead of looking at lines of text, what if we used our eyes to look at that building? It's so much easier to have oversight of a portfolio of assets when you're actually looking at the properties. And then beyond that, we are in an age of Internet of Things and devices and sensors and all of these fascinating inputs that we can embed these into the 3D models. And I can go onto a screen, pull up the property as it currently is, looking at it with my own 2 eyes in a 3-dimensional format. And then I can see what's the foot traffic, what floors are being heated, and how much energy consumption is that in real time. That's incredible. It's fascinating. And for people who are trying to visualize this, I say, think of it like a video game almost, where I'm looking at this creation of the building in high detail, high fidelity. In some cases, where there's the structural components, I can see what is the load, right? The engineering, the engineering load on a certain component, right? So how much is bearing at that time, and see, maybe I start to color code it, and then I can see all the architectural elements and all of that, and then I can start to click on it. I can explore it, and I can say, well, tell me a little bit more about this door. Who manufactured it? Well, maybe a door is not a good example. Let's take something more interesting. HVAC. So it intertwines and weaves all throughout the building. Very, very complex systems. And I need to understand the mechanical and the electrical, and I need to understand the warranties and the depreciation schedule, and to be able to click on that, right? Using our spatial abilities to explore that. So I'm very excited about digital twins. And I guess the investability portion is that all of that data at some point becomes an input for the appraisal of the assets. There's so much structural engineering, compliance, and codification, and municipal data that informs us whether properties are compliant and valuable. whether they are going to encounter any sort of scrutiny from the city or a broker, or in 5 years when there's maintenance issues. So really, we're taking all of that data, bringing it to life, and then feeding that into these computational systems that help us better understand the performance, risk, and value of these assets. And the value is the kicker, because you can see how if we are also creating a digital real-time financial instrument, tokenization, tokenizing the real estate, and we're tying that back to two-dimensional and three-dimensional data about that asset, now we have created the bridge between the real world and the digital economy, digital finance, and all of the instruments and all the activities that is going to happen there, and all the balance sheets and stakeholders that are going to be affected. That's a really incredible link that has not existed historically. So it's very fascinating. I was in Ireland a couple months ago with a bunch of architects, engineers, and contractors talking about this, because they designed these things. And then I said to them, you have to realize your responsibility. Of course, you're designing elements of the property, and you're helping the property owner manage it better, see it better, and maybe the insurance company is eyeballing it. But you're also designing liquidity. And I saw, a couple of them fold their arms and sit back, give me a raised eyebrow. Liquidity, we're architects and engineers. Why are we talking banking and finance? But the reality is that all of that data is valuable, and it literally becomes realizable value. It's not just that it shows up on a spreadsheet somewhere, but you have to remember that spreadsheet is now the valuation. And with an Oracle, you're taking that off-chain valuation, and with a click of a button, I can turn it into USDC in my wallet. That's incredible. I'm just going to keep saying that's incredible until, everyone gets tired. So this is one of those times where I'm going to get off my soapbox and get cued with another question.
Yeah. I mean, if I owned, or if anyone, if you owned a large building with, a 10-story, 20-story building, you name it, with a bunch of units in there, why would you not want to have a digital twin so you can do all the things, review all the things you just mentioned, make sure that it's running at top efficiency? I believe Palantir does that now with the government building out digital twins. It's just getting to the point of adoption. But everything that you're saying makes complete and total sense. One thing I wanted to ask was, I've been involved with digitization and tokenization of coins. We've had a business for a while now that does that, and the market is not there yet, but we're doing the build out in anticipation of that market opening up, and of course being first to market, at least in our industry, doing this type of thing and providing the experience of either investing in rare coins or the collection of rare coins in a completely new way. So I've seen firsthand what's involved, even with digitizing and then tokenizing, coin. When you're talking and you're going over your answer there, my mind started going to all of how is an efficient way to digitize so much data and so many assets. Like take, for instance, a building. The digitization of a building, to me, would seem completely complex and out of, my brain hurts even trying to contemplate it. And then you go on to a million other things. I can just think of coins because we've done them before. So in that case, we sent out images of the coins to a graphic artist. This is 2 years ago, before ChatGPT or Grok, where now I could do it in a couple seconds. But it was sent out, and then the artwork was sent back, and then it was digitized, and a smart contract was created for it, and then we put it up on OpenSea. So I guess my question is there a faster way now? Is it using AI to digitize all these different assets in different asset classes?
It's a combination of technologies and solutions. With properties, there is this concept of building information modeling. So your architects and engineers, you will pay them a lot of money to design the property before it actually exists, so that when you go to break ground, you kind of already know how you're going to phase the project, what it's going to cost, what that scheduling is, where people are going to place every piece of material. If the building's already built, there are high-tech scanners that emulate that, so you can take them through a property, and with pinpoint LiDAR accuracy, they're going to scan the interior or exterior of that property and try to identify, sometimes by manually or sometimes by AI, is this, what's the wiring setup, or is this a vent and part of the ventilation system? What are all these different things? And that's, after you scan it, of course, shows up in your software, and the software is highly tailored to start to turn that into a functional 3D environments that you can use, as opposed to if you just take a picture of something. You take a picture of it, you're looking at the picture, I can't play around with that. I can't start to dissect the walls. It's just not designed that way. So there's technology out there that is really helping to bring these to life. There's always costs associated with it. And I think that's one of the barriers to entry. Why doesn't everyone start to use a digital twin, or why isn't everyone tokenizing? Because the either upfront or recurring technology cost may not always be justified. What return on investment are you trying to realize by using this technology? If you can run the numbers and it looks like you're going to have improved operational and energy efficiency, that you could get a premium for the assets, that you can guarantee platinum LEED certification, and you're going to use less energy or optimize it for the time of day and the amount of traffic. And I guess I already said that, operational efficiency and energy efficiency, but it gets really granular is the point that I'm trying to make. So if you can identify, here's the ways that we're going to get our money back, and that justifies the costs that we are going to put into the technology, then it works. Here's exactly the workflows that get automated. Therefore, the number of hours saved, the people responsible, either they can be redirected to other tasks, or we just don't even need to hire someone to accomplish that, or the rework or whatever. There's certainly a bunch of checkboxes that I can offer that will say, here's how you could get your money back using technology like this. So that's sort of the reason why there's this natural market conversation, suppliers of the technology and buyers of the technology saying, this is what we can afford, but this is what it actually costs to provide that service to you. It's becoming lower and lower over time. Initially, tokenization and securitization was very, very expensive. Now it's starting to reach more of an equilibrium where we say this works and we're going to tokenize our assets because it's valuable to us and at a price point that makes sense for the scale of the asset. So that's an element there, but you were certainly teeing me up, and I'm going to take a swing that artificial intelligence is going to be the groundbreaking technology that helps us collect and aggregate structured data, analyze it, make predictions off of it like never before. This is the tool that operates 24/7, 365. It's in the palm of our hands. And the fact that we could plug in millions of data points in perpetuity to these tools, and then not only get an analysis of the information, but if you start using agentic workflows where it's like this recurring autonomous operations based off of the data that's being collected and then pushed through the pipes, we are going to be able to do things that have absolutely never been done before. It would be like trying to explain to people walking and riding wagons out west, right across America, that one day there's going to be, well, I guess America still doesn't have high-speed trains, but if we did, or airplanes, people are going to say, well, what do you mean I can travel the world in 12 hours? I can get to the other side of the world in 12 hours? That used to take 12 months.
Yeah.
That's and half your people die. You're like, right, they've got diseases and they're going overboard. So that's the type of incredible transformation where it's like, wow, the scale at which things are about to happen and the speed and the velocity and still the improved accuracy, assuming that all the AI gets tailored. Of course, we know it hallucinates, but if we can fine tune it so that you also don't have the human manipulation or the human error of inputs, that's incredible. What are we going to be able to unlock? In fact, I think it's quite a bit faster than what humans are really capable of managing or conceptualizing. We might even be getting ahead of ourselves. And people ask this too, like, we're going to be tokenizing everything. Is everything going to be trading all the time? Should it be? You know, what are the consequences of that? And also, what are the consequences of millions or tens of millions of data points? In fact, we were working on a project where they said we're going to be collecting 100 million data points from this smart building per year. It's like, I don't even know if we should be collecting all of that information, because are we going to be over analyzing the actual asset itself? And how do we separate the signal from the noise? At that point, is it just data for data's sake? So there's all of these questions that evolve from it. AI is going to do a large part to help us perform that, but still, it's sort of like, if you think of the internet, we have the entire world at our fingertips. We have all the world's knowledge at our fingertips. And then people are like, this is amazing. I'm going to doom scroll for 8 hours today. So we have this abundance of information, and then our brains are rotting away practically. Like, people are losing their attention span. What are the consequences of having all of that information at your disposal? In some cases, it's negative. So that's a tangent, but I guess I have to add in that disclaimer where, yes, AI is going to multiply by 10-fold or 100-fold or 1,000-fold what we are accomplishing in many industries and in capital markets and a variety of markets on a day-to-day basis. I think it will be predominantly positive, but there's going to be negative side effects for sure. And I'd rather admit that up front than act like it's a perfect system, because I think one of the things as I sit here and talk about it is I realize I don't even know if we have safeguards in place, and I don't know if anyone is going to be able to introduce them. We know that at the federal level, or really at the state level, regulation of AI was, what did they say? You can't regulate AI at the state level. So
Yeah.
it's like, okay, so we don't really have the safeguards in place, and then we have this abundance of data, and then you have entities like Palantir that are there. And I should say, I don't want Palantir and our digital twins in the same sentence, because we're just stewards of the data. We're not harnessing all of this data. We're helping people collect, prioritize their data, like look at what's important and then use it appropriately. We don't hold on to that. We're not monetizing it. We're not doing any of that. So, and that's very in line with like the decentralized or Web3 philosophy, which is that power to the people, right? A little bit of autonomy back. So, but still, you have these large entities with too much data, and that could introduce all sorts of wacky outcomes. I've been sipping on my coffee over here, and it's, you know, we're getting carried away. So I'll let you guys throw in another question.
Yeah, well, thank you for bringing that up. One thing that popped in my head very quickly was, you know, over analysis causes paralysis.
That too. Yeah.
It's an old saying, and it's absolutely true. You get bogged down, and not as much gets accomplished. And also with the guardrails, I agree 100%. There are no guardrails right now because it's just not. We're not at that point yet. The build out's going to happen, and then, like everything in our country, it's reactionary. So then the guardrails will be created afterwards. My fear in that it would be that if we get to the point where everything is commoditized, basically, it becomes digitized, tokenized, and eventually commoditized. Do asset prices become a bubble, like all assets across the board? And then what's the ramifications of a global asset bubble in all assets? Or it could go the opposite way. And that's, to me, what's fascinating about this, is that we don't know, and it's exciting to at least be in this in the driver's seat here, because I'll say it again. This is the future. It's just a matter of time. The amount, and I don't, excuse me for bringing up money all the time. I'm not saying this for myself, but the amount of money that others for sure are seeing that can be made from this, i.e. Larry Fink. He doesn't want to get involved because he's doing it as an altruistic thing. He sees dollar signs, huge dollar signs, right? So yeah, I mean, the future is wide open. I'm so happy that we have people like you, Matthew, building out projects and platforms and businesses in this space. Dustin and I and a few others here are working on a project called 𝘂𝗍, which is right along the same tracks as what you have going on, but with rarities, graded rarities. And it's just a wide open marketplace because there's so few people in this space right now, which is going to change, right? Once the dollars start coming in, more and more people will rush to this space, and that's going to be interesting as well. I know Dustin, he has much more knowledge in this, the digitization, tokenization space than I do. He lives and breathes a lot of that, which is fantastic. And I just I wish you nothing but success. And I hope that we stay in touch, and we obviously we want you on the show again in the future to discuss this further, because we went over for people who are listening today, we went over really broad strokes. We didn't get granular at all, really. I mean, there's so much we can talk about on this subject. And Matthew's involved in the real estate aspect of it. We're involved in collectibles and rarities. Others are involved in this and that. And so building a little network here, like we're doing, for the people that are in this space early, I think will be invaluable down the road, because we can all leverage off each other as things go forward. Does that make sense?
Oh, yeah.
Makes sense to me. Yeah. Well, and for anyone who wants a little behind the scenes, I think we got through like 3 questions of the 25 that you gave me. And that's on me, because I get so excited about these topics, but it's true. There's so much to say about all of this. I need to get used to like putting some duct tape over my mouth so I don't spend 15 minutes explaining digital twins. But it's such a fascinating time. And yeah, we could be talking about tokenized gold, because I think that's a fantastic use case of tokenization. I don't think everything should be tokenized. I mean, the overanalysis leads to paralysis is a really good point. So much information we might not even know what to do. And then there's opportunities for arbitrage, where some of that information might not be accurate. And that's why we do have due diligence processes in place to say, hold on, how do we make sure that this is true? And I do think that's a good opportunity for blockchain again, where it's not just data rich assets, but we're going to be looking for data verified assets, so that we can say, okay, out of the 1,000 data points you gave me, 990 can't really be trusted. These 10 data points can, and they're blockchain verified. So that's going to inform my decision, not the other noise. And we will have AI that is trained to limit other AI, because you're going to be gathering millions of data points. And it's like, okay, I don't know what to do with all of this. Please throw out all the junk and put this in check. Especially in capital markets, because if we have an abundance of information that hasn't been accurately scrutinized, then you're going to have insane volatility. And that's not what some of these asset classes are intended for. I mean, real estate, of course, it has its appreciation and cash flows, but it should be a core store of value. That's what people use it for, especially in institutional assets. And now you're telling me that they're going to be traded frequently, and they're going to have all these crazy inputs. Like, I don't want a rainy day ruining my portfolio. It's the same reasons, like, we have these natural buffers in place. You get a stomach ache and you don't immediately write a will. No, you say, well, I'm going to see what happens next. Okay, I feel better now. It's the same thing with the markets, where although they tend to be very reactionary, some asset classes have these natural buffers in place where we say there's going to be a little bit of a lag in the reporting, a little bit of a buffer on the books, so that we can make sure that the information is credible and maybe it'll correct itself. We're only going to mark the asset down if that's truly our interpretation of it. That way we don't get screwball analytics, and then you start using AI to trade, and people want to use AI agents like to immediately rebalance portfolios off of the smallest tick change. We're setting ourselves up for like this attention deficit, I don't know, crazy
hyper attention deficit disorder.
Yeah, but that as like a personality trait of our markets.
Yeah, that's true. See that?
That's how I feel about 𝗁𝗁𝗂𝗵𝗶. Not to take the mic, because I know you guys are like, hey, the show is an hour long and you're going to do another 15-minute speech here, but the whole 𝗁𝗁𝗂𝗵𝗶 or whatever in prediction markets, I strongly dislike that. And the guy just did an interview. He's like, well, I think that every disagreement between two people is going to become financialized. It's like, stop right there. You're too interested in whether or not you can. You're not thinking whether or not you should. Financializing everything that has odds. Are you kidding me? First of all, it's gambling. When did this turn into prediction markets?
Yeah, exactly.
And second, like, it's not creating value. It's over financializing a system. So it's introducing all this crazy volatility and opportunity for loss. What happened to protecting the retail investor? And now we're like, yeah, sure. If you think that you can 20x your money because something with a small probability is, could happen, go for it. Yeah, just do it. Everyone else is doing it. This is ridiculousness. And it's my same critique of cryptocurrencies. Most of them are going to be down to pennies or near zero because they are not legitimate, and they exist in this unregulated, crazy, psychotic environment. How can this technology be taken seriously when that's the precedent that's established? And we haven't even talked about the president and all of those coins that were thrown out there. It's like, seriously, Trump coin? That's what we're doing now? Like, whatever. All right, that's
cash grab. Cash grab.
Yeah.
Well, we didn't get to touch anything about tokenized assets. There's questions from the community. If you do have a little bit of time, Matthew, if you want to.
I have lots of time. Does everyone else have the time?
John, do you have about 15 minutes?
Yeah, I have 15 minutes for sure.
Okay. We'll get into a hard asset question. We'll go with the community questions. So yeah, this is both you guys here. So what do you guys think about like tokenized hard assets, like parallel when it comes to settlement systems during inflation and currency volatility?
You want to go first, Matthew?
I've done a lot of speaking. John, I'll give you the mic for a
second. Yeah, so I need you to repeat the question because I had a good thought there and then I dropped it.
All good.
Repeat the question.
So when it comes to tokenized hard assets becoming parallel settlement systems during inflation or currency volatility.
There's a great use case for tokenized hard assets in those scenarios. With inflation, that's just a part of our life. That's not. There's always been inflation. That's going to continue and ramp up, in my opinion. I'm going to go on a little tangent here before I answer the full question. I don't think we've seen, in my opinion, inflation really roar back to its fullest yet. I don't think we can go, and by we, Western nations with central banks, I don't think we can go for a decade with essentially free money interest rates, jet fuel to economies worldwide, and then a year ago, a year and a half ago, interest rates get bumped up, and it takes a long time for those rate hikes to work its way through the system, as you know, Matthew, and I'm sure you know, Dustin. But my concern, and if I brought in my employees and my coworkers, and you asked each one of them, they would tell you, I talk about this quite often, that the other shoe is going to drop at some point. I don't know when. No one really does, right? But you always have to pay the bill. That, I love the expression. I use it all the time. You go out and party, you go to the bar, you drink, you have a great time, you have fun. Well, guess what? You wake up in the morning, you're paying the bill for last night. Not necessarily monetarily, but in some way. We, in my opinion, have not yet paid the bill from 2008 up until, throw COVID in there as well, up until a year ago, really, 2 years ago, let's say. That will root its ugly head at some point. And that's why, as a use case, I love tokenized gold, precious silver, platinum, palladium, rare coins, rare notes, things like that, because they are great stores of value, just like real estate. Like Matthew said earlier, most people, they buy real estate. And unfortunately, we've entered a world where people who are, let's say, in their 20s, early 30s, they haven't seen these swings in real estate, only up, right? Maybe a little bit down now in the last year, but that's not normal, having real estate go up 10, 15% in a year, or even more in some years. It's just not the norm. Real estate had never really acted like that in my lifetime up until recently. In the 80s, we had some real estate bubbles that popped pretty quickly. But point being, there's going to be, as they say, the chickens will come home to roost. I personally, I can feel it. And I think you guys can feel it too. And those that are listening and watching our show, there's something, we're at the end of something, at the beginning of something new. And I love the analogy of, it's like being on the radio in your car, and you're switching from a station that you have a great signal to another station that has a great signal, and you're in that in between where you're getting feedback from both sides. And I think that's where we are now. What, in my opinion, is going to get us to that next radio station, that next leg of our economy, of our lives, is a financial calamity, unfortunately. I don't know what's going to precipitate it. I watch silver. I'm sure there's many people who are watching our show do, and it's skirting at $60 an ounce, and I don't see that slowing down. And that's just one of the canaries in the coal mine. So having these hard assets digitized and tokenized with a wallet where I can now keep, and I'm going to use coins again as an example. We could use fractionalized, and we didn't even talk about fractionalized ownership of real estate, which I really would have liked to, but we could save that for another time. But if I could own X amount of ounces of gold, or and the way to tokenize that gold is basically you have allotments. So let's say you have $100,000 allotment of gold that has a unique numerical identifier for that allotment, like a ticket. We can now digitize that. So now, Matthew, you just bought that $100,000 in digitized gold, which is held at a depository, but you don't have to worry about taking physical delivery. You don't have to worry about getting robbed, right? You don't have to worry about keeping it at a safe deposit at the bank and then a bail-in happening, and now that gold is gone. So I can keep it on my phone, my wallet, my ownership of that asset. And that is what I think would be a great hedge, going back to your original question, Dustin, against inflation, because these types of assets, real estate, right? Artwork, precious metals, fill in the blank. High-end assets are always great stores of value, and for the most part, they're protection against inflation eating away at your hard-earned dollars. So there's a great use case for hard assets on-chain, digitized for future use against inflation.
I would say, John, you're absolutely correct. I like the economic canary in a coal mine analogy, because what you're seeing with the rise of gold is that it's symbolic of a reduction in trust for the US dollar. There is not going to be complete de-dollarization, but it's happening. And believe it or not, blockchain is going to be a catalyst. And here's why. Because as we tokenize value and we start to transact value across borders, we could do that in the format of tokenized gold, which is politically neutral. So if we talk about the volatility of currency or the inflation of assets, you want something that is not a political liability. Gold, silver, or other hard assets are exactly that. Transacting in dollars, why would we transact in dollars if we have the opportunity to transact in something else and realize it just as quickly? The reason why we depend on the dollar is because we know that all the banks around the world, minus those that we sanction, are in cooperation with that dollar, right? They're going to have some sort of reserves, and you can make your you can swap your currency at a moment's notice, and they're all part of the SWIFT system. So if we can still do that with an alternative asset, yeah, people are going to throw away the dollar immediately and say, let's transact with tokenized gold. And you still have the settlement, you still have the swap. It's now very auditable, right? That's a major benefit there. So and it's programmable as well. We talk about programmable settlement. Yeah, I think that's the direction that we're going into. The question is, at what rate is the U.S. economy and the U.S. dollar going to implode? It kind of seems like we're trying to accelerate that process almost intentionally. That's my read on the situation. But again, who knows?
Agreed. Thank you.
Great answers, guys. Yeah, the macroeconomy is definitely going to be I think the exponential use case of tokenization. I know ISO 222, I believe is the standard. They just switched over, I think this last week.
Oh, ISO 20022.
Yeah, 2022. And tokens like XRP and I believe Cardano's up there. HBAR. Yeah, so there, this blockchain is going to be exponential when it comes to settlements, and especially RWAs is kind of entangled there. So it would be good to see some type of standardization with NFTs. Obviously, NFTs are kind of a stigma when it comes to the ideology, or name the naming scheme of NFTs themselves are a little bit distasteful for different markets. But real world assets kind of brings that forward. Maybe that will kind of bring away, take away from that stigmatization around like just pictures on the screen with metadata. And or NFTs are kind of more of a little bit more robust, how we want to see it, with metadata used for like real estate or deeds or any digitization that has IPSF or IPFS, like that data contained, not centralized like some of the OpenSea NFTs and pictures and what they have for projects. But yeah, I love the kind of futuristic idea of having tokenization as a standard, and RWAs being attached to those standards as well. And maybe if it's ERCs, maybe it's something else. When it comes to that, I know a lot of other blockchains are let's say like I was in the Polkadot ecosystem, they use different standards, but everyone kind of leads into EVM, that just kind of overall standard across the world. JP Morgan, they're kind of stable coins, EVM. Ethereum just came out the upgrade yesterday. But yeah, so yeah, I love the take. We have a lot to unfold when it comes to RWAs. Love to have you on again, Matthew. We have some questions from the community. And then we'll go into our final words here. Let's see. What is the biggest misconception people still have about RWA tokenization? Matthew, what's your take?
The biggest misconception. I guess the question that I get asked most often when I go to speak places, and I always push back, is the liquidity portion. I don't think that RWA tokenization or tokenizing RWAs inherently creates liquidity.
Right.
Markets just don't work that way. However, it sets the stage for the play. That's what I see. We still have to bring in the actors, and our actors are the buyers and sellers who are going to go through their conversation. They're going to perform their price discovery and then transact when they like what they see. But we're setting the stage by saying, here's these financial instruments that are now accessible to you. Here's data so that you can figure out what the price is for that asset, either in a standardized model or let the market self-determine and say, well, we're going to trade this at a discount because the data doesn't look good or it hasn't been baked into the valuation, and so we're going to trade it at a discount. One thing that is nice about tokenization is the global distribution. There's a lot of opportunity there. You have the whole world as your oyster. Lots of investors can be brought in, and maybe that will allow us to socialize these financial instruments. In other words, shop them around, find the right buyer at some point. A lot of markets right now, I mean, it happens in conversations like this, to be honest. A lot of these assets that are illiquid, it requires a few people on a phone call to say, hey, are you interested? All right, hang up, find another person. Oh, I think my friend would like this. I think my uncle will like this. Okay, can I get his phone number? That's how a lot of private market deals are done. And that's not true liquidity. So now if I can show 1,000 people that same deal, doesn't have to be a phone call or a friend of a friend. It's on a marketplace that's globally accessible. You're definitely going to find some bids for that. So the liquidity portion, and then fractionalization, maybe if we start to fractionalize assets, it would be easier to find investors who are interested in that because the share price is going to be lower and you could also transact those shares. You might not want to sell the asset in its entirety, but 20% of your stake, if you could fractionalize to that point, sure, I'll liquidate for 20% and someone will buy 20% of that.
Interesting. Yeah. I think to answer that question, the biggest misconception of which I was part of is the speed of the build out. It's going to take much longer than Larry Fink first visualized and reported on. I think we're going to have to push it out a few years because, like Matthew said at the beginning, how are we in 4 years? How are we going to grow this space 1,000%? I don't see how that happens in 4 years, but you never know. Who knows? Crazy things happen, right? So we'll see.
Yeah, there's a lot of blockades when it comes to like permit or like standardization or like who is assigned to these standards, like who offers the ability to mint these standards of like RWA tokenization. Like I don't know who that's going to be. I know me and John talked about like aligning either with getting some type of like ability to be that person to offer those standards or like minting, or like being able to fund, like offer funding for projects that want tokenization. So it's like there's a huge segue that's going to happen. Like who are going to be the ones that are offering that, and who are going to be ability to fund those projects. I know Matthew, you're mentioning about how you're kind of at the the foundational layer aspect of helping these real estate properties becoming a bit having a better ability getting funding, or tokenization in that sense. That's gonna be interesting, what that looks like in 4 years. But yeah, that's it's like a cyclical. When it comes to like blockchain and crypto, is that going to be the next, phase, when it comes to, obviously NFTs have their moment, before. Will RWAs be the next one that comes to fruition? The focal point, BlackRock and Citadel, and they're focused on RWAs. So we'll see what happens in the next 4 years. It is really hard to hit that TAM that's been mentioned, like around 30 trillion and 3030, but or not 30 20 30 30 30 2030. But I think we're all gonna kind of pave that way in our own way, depending on what people are doing out there. But I think real estate's huge. Commodities, precious metals, those are going to be really big. We do have some other questions, of course, but we're running out of time and we're over time here. Thank you guys for being here. Want to do a little plug for us? You can contact us at 561-310-8341. Email us uniquecoins@gmail.com. Website is coinandcurrency.net. You can find us on eBay, American CC. Check us out. We have a lot of inventory. Call us directly, as well as we have inventory not available on eBay as well. Check us out on our website. We do have products available. And we got some contact information for Matthew as well. So contact Matthew Schneider on X, Matthew Schneider with a 3 for an E, and also Building Inc. on X, Real Matt Schneider on LinkedIn. Check him out. Apparently you were like an influencer. You mentioned that the other day about LinkedIn, about you being one of the top influencers on LinkedIn. I believe that was mentioned.
Yes, there's a website that ranks people on LinkedIn based off of their following and engagement. And I rank pretty highly when it comes to tokenization, finance, urban planning, and cars. I think I don't talk about cars or urban planning that much, but I was on this list, and I've got like the CEO of Ford and the CEO of Nissan and Chevy, and it's like, and then my name's on there. I'm like, I don't know if that's a typo or like what I did to show up with these titans. But in terms of tokenization, yeah, I have made a name for myself. I like to have hard conversations, but what is the reality of tokenization? Because I think one of the things that Larry Fink is doing when he says, hey, we're going to reach this number and everything's going to be tokenized, is some sort of reality distortion effect, which Steve Jobs loved, that if you make people very excited about it, even if it's an unreasonable outcome, that will accelerate the rate at which things accomplish. Like if we say we want to tokenize 1 trillion by 2030, it's like, okay, nice job setting the bar low. But if we have to push for 30 trillion by 2030, maybe we'll get halfway there, but that's still 15 times more. So I think that's what's happening. Just create some hype, create some buzz, get the companies to start up, and then we'll see how far we can push it. If we don't make it, no one's being punished. There's no consequence for not reaching that. We'll just reset the mark and try again.
Good point. Yep.
That's true. Yeah, there's a huge TAM, but yeah, we could reach that. I think we could reach at least 10, by that time.
Well, it depends on how you calculate it, because stable coins are considered tokenized RWAs. Yeah. And then you also have private credit, you have treasuries, you have all sorts of assets that are showing up. And what's going to happen, we didn't talk about this, I know the show's wrapping up, but real quickly, if you talk about tokenized economies around the world, when the BRICS nations really start to enter the scene, they have not yet. It's been very slow or regulated, right? Beijing's pushing back on some of this stuff. But when it happens, you're going to see tokenization of anything but the dollar, right? They want their hard assets and to be able to transact that and to be able to move around sanctions and have that freedom and still quick settlement without relying on the SWIFT network. And then you are going to see a lot of inflows on chain, and that's going to shake things up a little bit. And I can speak to that, not now, but just in general, because a couple of weeks ago, I was actually supposed to fly to Iran. Visa got canceled last minute, so I did a call-in similar to this. I gave a keynote about how is RWA tokenization impacting the world, and what does it mean for a BRICS nation like Iran? I was the only American researcher there, and so it's very exciting. They're like, oh, whoa, this is cool, diplomatic, right? And I said, one of the things is you tokenize these assets, and when it's on chain, it's really out of the grasp of American hegemony. We don't have control of everything on chain. So if those massive economies with billions of people start transacting, they are going to bring billions, if not trillions, of capital on chain for their own purposes.
Wow.
And there's the liquidity.
No.
That is, yeah, right.
All right, guys. Well, we're over time. Quite a bit.
Great. Thank you so much, Matthew. It was really great.
It's my pleasure. Looking forward to the next time.
Yeah, definitely
Likewise.
get you on with us, and then we're gonna have a panel as well for RWAs, so we'll have some other guests as well. Yeah, final words from you, John, before we take off. Anything to look forward to?
Yeah, I'm looking forward to silver hitting $65 an ounce here. Hopefully by what's today, the 4th? I'm gonna say I'll do 65 by January 5th.
All right, 65, guys.
But
Lots
that's where
of
I think we're going. But no, in all seriousness, to the people that are watching and listening, this is something that if you're not involved in some way, somehow, some shape, you should, if nothing else, educate yourself on this and what's happening and the transformation that is taking place. Unfortunately, a little slower than we might like, but it is still taking place because again, always follow the money, right? The amount of money potentially that is going to be made. I'm always trying to say securitize, tokenizing these assets is going to be substantial. Like that's not the right word for it. Vast isn't even the right word for it. So whether it's just for educational purposes or you think there might be an opportunity for you in this space, get involved. We need people with great imagination and great minds in any kind of space to make it develop and grow. So come on board.
Fantastic. Matthew, what's final words to our guests here? And
you shouldn't. You should have just skipped over me.
We'll be here for another 30 minutes.
Yeah, love to connect with everyone. Thanks so much for having me on.
Of course. No, yeah. What's going on with Building Inc. and some final words for our guests.
No, those are definitely my final words. Everything's good here. Send me a message if you want to learn more. Happy to chat.
Fair enough. I'll put his information on the screen, guys. You can get in contact with Matthew on all his socials and get to know a little bit more about what Building Inc. is doing. So final words from me. Definitely check out our eBay. What else we got going on? We're building 𝗵𝗍. That's really cool. We do
2026. Yeah, go ahead. Sorry, Dustin.
Oh yeah, no worries. And then we're having a guest next week for David Donahue, who is building physical albums for coins. So check this out, December 11th, next Thursday, 1 p.m. Eastern. You can catch us here on every Thursday, except for Christmas. Apparently, Christmas and Thanksgiving hit Thursday, so we're not going to be here for those days. But look forward to other panels as well for numismatics as well as RWA based. And we'll definitely have Matthew on again. So thanks everybody for being here. Appreciate you. Be sure to follow us on our socials, and we'll see you guys on the next one. Peace.
See you guys.
See ya.